All right, I'm in charge of the testing. Can you hear me?
And I'll
Testing,
try a little
1,
bit of
2,
testing
3.
too. I mean, I think we're getting some amplification within here that we
Yeah.
were getting before.
Yeah, I agree. Testing, 1, 2, 3.
A, B, C, D, E, F, G.
Where'd you go? Hello? Okay, good.
Good.
Yeah,
We got
sounds better.
Two people in the way.
Who'd you say?
John.
Hadley, sorry,
Shall we get started?
He's suspecting Gabe.
Yeah, I think we are. I mean, I talked to him. I think he said he would be here. Yeah. Hi, Karen. Hi, John. We're just waiting for Gabe, and then we will get started.
Is Gabe going to be a part of this? Because typically management shouldn't be a part of the audit committee meeting unless he specifically is going to be there.
Oh, really? He's been attending a lot of our meetings just because we're dealing with subject matter where he's the one who knows about it. So maybe that depends on what's on our agenda, whether it's appropriate for him or not. So how was the Pacific? Was it all work, or did you?
Yeah, it was mostly work. It's a little bit frustrating down there. The way the government's set up, they have the Matai system is very strong down there, and so political favors are very rampant. So if you do something good for the government, then they're going to put you in positions. And so in a lot of the key positions that we deal with, there's people that are not really qualified to be there. So it's a little bit frustrating, but yeah, we were able to go around and our wives went with us. And so we were able to show them the island. And
Okay.
so it's definitely cold coming back here. I'm not used to the
because
cold
Gabe
place.
just arrived, and we're gonna.
I would appreciate maybe just notification when most urgently needed for this meeting.
Okay, I mean, if John can handle the financial statements all by himself, then, I mean, that's, you know, we've only got 2 agenda items. That's the one we need you for. But if we don't need you, if it's fine with John, you know, your call.
Okay, I'm happy to come over. Thank you.
Okay. It's the
Yeah,
election.
I would say if there's any specific questions, then we would have Gabe come in and answer specific questions on the maybe
So let me,
balances or details.
call this meeting to order. And present are the 3 audit committee members, Commissioners Winfield, Hadeen, and myself, Kevin Walker. And then on Zoom, we have Karen Curtin, our financial advisor, and John Hatterley, our external auditor, is the financial statements. First item is approving the minutes from the previous meeting, September 23rd.
I'll make a motion to approve those.
I'll second that.
Okay, any further discussion? Not, all in favor? Okay, that's approved unanimously. Okay, so now we have review of Grand County financial statements. John, take it away, please.
Okay. I think most of you, I don't know if you want me to go through everything that we went through in the commission meeting, or if we just want to talk about the audit, how things went.
Yeah, I think you don't have to repeat what you already said in the commission meeting.
Has everybody had a chance to review the statements? Is there any questions or concerns on the statements themselves?
I had a few minor questions, but
Okay.
nothing real interesting.
I think everything went pretty well. Like I said I'm just pulling up the financial statements real quick.
Interject just for a second. We do have citizens to be heard. Do we want to?
Oh,
make
sorry.
sure? Sorry. Yeah.
I'm sorry,
make sure
I missed
that-
that.
Sorry, John, I might cut you off really
Yeah,
quick.
that's
had
fine.
An agenda item, so.
Okay, any citizens who want to say something? Citizens to be heard? Okay, looks like not. Please proceed.
Okay.
So go ahead, John.
Sorry. John.
Okay. I mean, just typically what I'll do in the audit committee meetings is we'll kind of go through how the audit proceeded and how it went and any concerns that we had. I think everything went relatively well as far as the county side. I would like to see Squire a little bit more involved if possible. I know that Matt came down about a week before the audit was supposed to start, and did the adjustments, what adjustments that he felt needed to be made. I'd like to be there'd be a little bit more review with Matt and with Gabe, going through a lot of the trial balances, making sure things were coded correctly. You know, we still had some audit adjustments, which are fine. I don't mind the audit adjustments, but if you're paying an outside CPA to help you prep for the audit, then I would typically, we're not going to have a lot of adjustments. So I would like to see that. I met Gabe's new finance assistant. He seems pretty gung ho on drafting the financial statements. And I told him we would actually send him our templates, and I don't even mind coming down and spending the day and talking to him about how everything falls into place so he can put all the funds in, and then how it converts to the government-wide financial statements. That's going to be the most complicated part, is making your adjustments from what's reported in your funds to then the full accrual government-wide financial statements. But I think that he can do it. I mean, it's not rocket science. It's just journal entries that get made. adding the capital assets, long-term liabilities, things like that. So I'm excited about that. I hope that, you know, he's serious about doing that. I think the biggest concern that I have, and this is something we talked about in the commission meeting, is just getting the component units to get their financial statements issued in a timely manner. You know, we had a draft of the county financial statements ready before June 30th, minus the component units. And I think the only adjustments that were made after that June 30th draft was just the results of the state auditor's recommendations or audit. And then just adding all of the component units in and then rolling all those up into the audit, which does take significant amount of time, which is why if you can, as a commission group, maybe request that the component units gets their audits done significantly before June 30th, if possible. Other concerns that we had, I think that Gabe is starting to find his role. I think the last couple of years have probably been a little bit deer in the headlights for Gabe, but I think he's getting to a point where he knows and understands what his role is and what needs to happen as far as financial reporting goes. So this audit has actually been better than the last two audits that we've done, because Gabe knows and understands what the adjustments are. I think that at some point in the future, you know, Squire may not be relevant anymore as far as helping you guys close. If Gabe feels comfortable closing the books and making the adjustments, especially with the new finance assistant, I don't know. I'm not going to tell you guys what to do, but I think that may be something that you look into in the future, is maybe phasing Squire out. It's just going to save the county a little bit of money.
Okay, thanks. Alicia, could you clear that dialog box that's on the screen? Thanks. So you mentioned earlier that Stephen, you know, the finance assistant to Gabe was going to know about taking over part of the audit work you've been doing. Is that common in counties of our size, or is that unusual?
So yes and no. We have counties that draft their own financial statements. In a perfect world, the entity, whatever it is, whether it's a county or a city or whoever, would actually draft their own financial statements. And then we would take the financial statements and break the financial statements down into trial balance, and then we break that trial balance down into pieces. And that's the main component, and that is the focus of our audit, is testing all of the balances inside of the financial statements. And this is where, when in the commission meeting, when Commissioner Winfield was, you know, saying, you know, he doesn't want us to audit our own work, that becomes a threat to us. Anytime that we draft financial statements, that's a threat to us, our independence. And that's why, as far as putting the financial statements together, that's why it's the very last piece that we do, is because that helps us. We've already done all of the test work. We've already performed all the audit. Now it's just a matter of putting the financial statements together. That helps us kind of not impair our independence, along with the other controls that we have in place. We have other partners here at this firm that review all of our financial statements that we prepare. They're non-engagement partners. That's something that, as a peer reviewer, so I'll go out and review other CPA firms. That's something that I've had conversations with them about, of you have to have controls in place. And this is more of our standards rather than something that you as a county needs to worry about. But if us as a CPA firm, if we're going to draft financial statements for a government entity, and this is government specific, so this is under Yellow Book, then we have to have controls in place to make sure that we don't have that self-review threat that Commissioner Winfield was talking about, where we're reviewing our own work. We cannot make any management decisions, and sometimes part of drafting the financial statements, how things get allocated, we have to refer back to Gabe and say, hey, you've got to allocate this for us in the financial statements because we can't make those decisions for you. And so having somebody there who can draft the financial statements, even if they're just putting the statements together and we help them with the notes, that would be a better situation than us just drafting entirely. It helps maintain our independence, and it helps your staff know and understand throughout the year if they're giving you financial reports as an audit committee, or if they're presenting them to the full commission, they're going to know, okay, there's an error in here. We need to make some adjustments, because they know and understand. They've looked at the financial statements. They know how to prepare financial statements. They can give you actual presentable financial statements that mean something to the commission. So that would be our recommendation is, and I would be excited if he wanted to take that over. As far as counties go, we probably have about 75% of the counties that we do. So we do 9 counties, and we assist in at least part of drafting the financial statements for about 75% of them. So you would kind of be an outlier if you could have somebody who drafted your own financial statements, but you would be a level above everybody else if that makes sense.
Yeah, thanks. That helps. We also have questions.
Yeah, Cody, mine's kind of a two-part. And some of what I would like to say here, I'm sure is repetitive, but it's also a little bit to bring it light, or maybe put you a little bit on the hot seat here. And then the other part of this is the process of how we got to where we are right now, when this should have been the first step rather than the third in the process, in the proper process of filing this audit of yours. It should have come here first, but first I'd like to go over, more importantly, the actual audit of yours. And I know that everybody in the room is aware of it, but we've been the subject of a large state audit. Our tax revenues have been frozen, and yet we haven't received anything from our external auditor Larson's or our internal auditor EFG, which is Cody Dieter, laying out a plan on what we need to do to fix or prevent this situation in the future. And so I would have thought that you would have caught some of that in this current audit. And yet when I go to the final couple of pages, we're basically given a clean record here, John, and I feel like it's serious enough. And yet you say just a moment ago that if we were doing our own financials, we'd be in the top percentage of all the counties. Well, right now we are the worst county in the state of Utah, considering the audit that we're under. And so I'm a little bit concerned that we're not taking that more seriously, and maybe it's the internal auditor's job to bring that to light, and it isn't yours. I'm totally open to you kind of addressing that for me. I mean, we haven't received anything regarding the situation that we're in from either our internal or external. And I know I'm repeating myself, but it's a little frustrating on my end regarding that.
So let me address it this way, and maybe it'll make a little bit more sense. So our scope is an opinion on your financial statements. And this is something that I've talked to the state auditor, because this is a question that he posed to us. He said, and I think that you're talking specifically about the TRT issue with the state audit, them looking into it a little bit closer. And he asked what we did as far as testing the TRT. And my response to him was, well, we test the revenue. We make sure that whatever revenue you report on your financial statements ties down to our third-party confirmations, and it ties down to the dollar. How you spend that money really is not my position to say whether or not you're spending that money correctly. And so what I told Seth at the state auditor's office was, if the code is clarified to where there is no ambiguity and no judgment in how this money should be spent, then we could appropriately test that as an auditor and use our auditor judgment to say, yes or no, you spent that money appropriately. We used to test TRT as part of state compliance, but the state auditor felt like that was not a relevant compliance that we should be testing. Therefore, if it's not important to them and they don't feel like that's something that they want reported on, then I'm not gonna come down on the county for a judgment call that you made in how to spend that money when there's so much ambiguity in the code on how that should be spent. Does that make sense?
Yeah, a
So
little bit. I mean, I'm looking, and I'm not looking at it. I do have it up on my computer, Moab City's audit report. And in it, they find that there are some non-compliance issues, and they come up with a schedule of how to correct those. And I guess
Sure.
that is what I was looking for in this year's audit to help clear up last year's. Now, as you explain it, maybe the state auditor isn't looking for that, but as a commissioner, I'm looking for it, whether the state auditor isn't or is. And I'm not trying to put you on the hot seat, John. I just know that if we're going to move forward, we can't get an A report card when we don't even have a tax revenue at the county right now. And I know that some of these TRT issues have been written off as clerical errors, but regardless, I would have thought that some of that would have been caught in some kind of a schedule to help fix that. If it was a clerical error, whose responsibility was it to catch that? It shouldn't be the state auditors.
Well, in a roundabout way, it is the state auditors. It's not, because that's not something that we would normally test as part of any engagement that we're involved in, if that makes sense. And no, you didn't have a clean record. I mean, if you look at the schedule, there is the budget finding. I mean, that's a compliance issue. So that is something that the state has said, hey, we want you to look to make sure that everything is within budget. So the state sets every year as part of state compliance what they require external auditors to test as a part of Utah code. Does that make sense? So what you're looking at in Moab City is their external auditor, which I know very well. We have a good relationship with them. They're looking at the same documents that we're looking at coming from the state auditor. And the requirements that we're required to test as part of the audit to make sure that you're in compliance with those areas that they deem most appropriate. So the TRT issue, the state auditor, they issued their report with their findings. And as far as I was told by the state auditor, was that most everything in their report was taken care of, that those adjustments had already been made.
And I know that there's negotiations going on currently, and I appreciate that.
Correct.
And respect that fact. But if you're telling me that for the constituents of Grand County that they have to call the state auditor to audit our books every single year to make sure that we're doing proper process here, I'm wondering where we're missing, because it would seem that the internal and the external audits are set up to catch some of these. And then back to my original saying the proper process here, this audit should have went to the audit committee, and then it should have gone to the commission after we'd had a chance to review it and see if it had issues, and then to the state auditor. And in fact, it went just the opposite. You filed it with the state auditor, then we brought it to the commission, and now we're here. And in my mind, we got the ass pushing the cart instead of pulling it. We're ass backwards here.
But that was a county decision.
And I would put that back a little bit on the county, as it's not my responsibility as the external auditor to make sure that the audit committee is reviewing the financial statements. That's an internal control that you have that you should be following. And like I said, we had a draft of the financial statements that could have been reviewed before June 30th. Yes, they were not finalized, but there was enough that the only changes that were made to the financial statements were the request of the state auditor and the component units.
Well, I guess for me, this audit committee is one of our internal controls,
Sure,
And-
and it should be.
but yet I mean, it's too late, right? Maybe next year. I guess is my point is that we seem to we have this thing backwards, and I agree that it's probably not your fault, and I don't mean to put that on your shoulders, but there's a process here, and clearly the county evidently is not following that process.
And I would agree. I agree that the audit committee should be meeting. I would actually like to meet with the audit committee prior to us beginning field work. To have you guys express any concerns that you have as part of the audit. The
Which
TRT
would make
issue
total
could have
sense to
came
me.
up that you could have been, concerned about, hey, we would like you as part of your audit to look at what your opinion is or communicate the issues with the TRT. Because I could have communicated earlier with the state and said, look, what's going to happen with the TRT? This is our guidance under our audits. This is what we're looking at. What additional guidance do you guys have as far as the TRT goes? Because that's got to come from the state auditor. That's not something that anything under my guidance or any of the statutes that we follow as external auditors, that's not a part of anything that we would do unless the state auditor requested that. So my expectation would be that we meet with the audit committee. The internal auditor should be a part of the meeting, and he should be meeting with the audit committee on when you have meetings that I'm not a part of. So every audit committee meeting, he should be a part of that. And then we have a meeting at the, if you want to have a meeting in the middle when we're done with field work and we're, kind of finalizing things, that's where we can talk about issues. We can talk about the findings. You'll be made aware of the findings, before we finalize the audit. And then we have a meeting, once we get a draft, then you guys review the draft of the financial statements. Because really, there's a lot of note disclosures in the financial statements that you can reword however you want to. And then I can make those changes and review them and make sure that they're in line and they're appropriate note disclosures, but it's your wording. It's not our wording. Does that make sense?
Yeah, it does. And I appreciate you walking us through all of that. The importance of this committee, I think, is somewhat lost on the county, or it has been lost on the county. And I'm just trying to show that it's a pretty critical step in getting to where your audit is submitted to the state auditor.
Yeah, and I would 100% agree with that. And this is a struggle that most government entities have with audit committees. Is the state is saying, hey, as part of your internal controls, you should have an audit committee. But has the state ever come down and said, this is what an appropriate audit committee, this is how you hold audit committee meetings? So I hold the state liable, and I've talked to the state about this, saying, look, this is your job, is to go out and train the entities on what an appropriate audit committee is, what their meeting should contain, when should they have the meetings, what's their role as far as,
Well,
in the audit process.
We do have some guidance from the state. It's in resolution 3165. I think it lays it out pretty clearly. I'm just trying to make sure that moving forward, that there's a seriousness about this audit committee rather than just expecting to rubber stamp something that you hand us.
Sure, I agree with that.
I appreciate, John, all of it and the education from you and the work that you're doing there. And I definitely hope that next year things go different.
Further questions? Changing gears a little bit.
I think Karen had a question.
Oh, sorry, I didn't see. Yeah, go
Yeah,
ahead.
no worries. Very interesting dialogue. I did have a couple of questions, Sean, and maybe these are things that you've already been over with the audit committee and they're familiar with this. On the statements, have you been over sort of is the audit committee familiar with the reasons for the changes in operating grants, capital, interest, the gain and loss disposal? There were some pretty significant swings in the change in net position activities. It's part of the MD&A. I'm looking on page 14 of 94. Is the audit committee kind of familiar with all of this already? Or have they had that opportunity to understand the big picture changes in the financial statements for the county?
There was a little bit of discussion in a commission meeting about those, but only a little bit. This is the first time the audit committee's looked at the statements. And some of the questions I was going to ask were about parts of what you just mentioned.
Okay. Well, maybe John, would you mind just kind of high level going over a couple of those things? For example, like operating grants increased from 5.6 million to 6.9. Capital grants went from 2 to 2.9. Or I don't know if are you familiar with kind of what happened at the county level to
Yeah,
create these situations?
I'd probably have to go back and look at the details. I appreciate the question. One of the things that I would say would probably be better information for the audit committee and the commissioners is to have Gabe present a year-to-year comparison on the fund statements.
Mhm.
As far as the government-wide, which is what the MD&A is all based off of, the government-wide financial statements, there's a lot of adjustments and that's the conversion from the fund accounting in government to the government-wide, which is the full accrual. So the funds are the modified accrual, so it's basically cash basis with receivables and payables on it. So it's current resources, right? Versus the government-wide, which is full accrual, which is going to have all of your long-term assets, long-term debt payments, things like that.
Yeah.
And that's where like the gain on the disposal of the assets. So that's $2 million. So there were assets that were disposed. Well, you're never going to see that in the fund statements outside of you're going to see a money that you collected on those assets, right? However, on the government-wide statements where we have capital assets, now because of the disposition of assets, then you now have a $2 million revenue, which you didn't have last year,
Right.
by disposing of those capital assets. But for the county, it doesn't really, for operating purposes, that's not going to really affect the operations of the county. Does that make sense?
Well, no, I mean, of course, I understand, government, a fund to government wide. I've audited governments for 11 years and worked in a government for 6. So I understand the process. I guess I just wanted to make sure that the audit committee understood the big picture. I know there's a lot of focus on what's happening with this TRT, but the TRT is important. And of course it's, driving some adjustments and some transfers from the general. There's also a lot of, big picture activity happening within the county. The gain on disposal of 2 million is huge. So there must have been a significant asset, piece of land, something that was sold. And I guess I just wanted to make sure from the perspective of the audit committee that they understood that. There was also this big change in the net pension liability. And so I was wondering what
Yeah.
happened there. Was there a new pension plan implemented, and is the group aware of what it was and why it was?
Yeah, let me talk about I'm just looking real quick at the gain so I can see if I can see where it was at.
Yeah, it was in the
So it's in the
capital
capital
projects
projects
fund.
fund.
Yeah,
I would have to go, I need to go back and look at the details. I've looked at so many audits
I
recently that
bet.
I'd have to go back and look at the details to find out what it is. This is where it's good to have Gabe because he would probably know the details or remember the details a little bit. I can look that information up.
Sure.
Um,
And maybe the committee is content with this. I mean, I personally don't need to know this. I guess just from the perspective of the audit committee,
for sure.
if I was on the audit committee, I would want to know. And then, yeah, the pension. And then when I looked at the budget to actual, there were some big swings in intergovernmental revenue. It looks like like the county originally budgeted 4.8 and then had a final budget of 8.7, but the actual only came in at 1.6. So again, if I was the audit committee, I'd be asking, why was the budget increased twofold when the actual was half of what was originally expected? So
Which line item were you talking about just then?
I was looking at the budget for intergovernmental revenues. This is page 67 of 94.
So I can
And
probably
Karen,
answer
just-
that.
Just to answer your question, Kevin, or Karen, I'm sorry. Yes, I think the audit committee should be concerned about those things, but without the experience, that's one of the reasons that we've pushed hard to hire you. And I look for, and I don't mind an email ahead of time so that I can then go and research this stuff because I don't have your background or expertise or John's, and I want to know where these things are. And that's one of the big reasons that I think you're part of this board.
Okay,
So-
well,
So let me
Okay.
answer a couple of questions, Karen, before we get too far ahead. So let me answer the questions that you've asked so far. So the budget difference, they actually did receive, so they budgeted to receive grant money, which they did receive, but that got pulled out of the revenue and put up as unearned revenue, so a deferred inflow. That is the LATCF money that they have not spent yet.
gotcha.
So that's going to
Okay.
show up as a revenue next year. So next year, they're
Yeah.
not going to budget for that, but then there's going to be the opposite effect next year where they're going to budget a lower amount, but they're going to recognize if they spend the money in
Mhm.
2025, they're going to recognize, or I guess 2024, they're going to recognize that $6 million.
Okay, perfect.
So
Understands
if you
timing
look-
difference.
Yeah, so if you look at page 22, which is the fund balance sheet, so the general fund, you'll see that in unearned revenue, it's $5.79 million. So that's money, that was part of the audit adjustment where they had counted the entire money that they had received, which would have, in essence, matched their budget.
Mhm.
But
Mhm.
then because they haven't spent that money and with the matching principle, we
I
had them pull
understand.
that out. So, and then as far as the net pension liability, this is totally out of control of the county. And so when I'm talking to a commission or an audit committee, I will typically tell them to ignore the net pension liability. This is a frustration that we have in the state as auditors. So everybody in the state participates in the Utah retirement systems. The county really has no option or doesn't have any say in how much money they're going to contribute to any employee's retirement system. That is all dictated by the state. So under GASB 68, if it's a cost sharing plan, which the URS says that they're a cost sharing plan, then whatever the pension asset or pension liability is, that gets broken down into each entity's percentage of that total liability.
Yes, mhm.
So every year we get confirmation from the URS of this is the activity that happened in Grand County for the year. This is the change, this is contributions, this is the change in their liability. And it's been a little bit frustrating. I've actually tried to get an auditor outside of the state who knows pensions very, very, very well. Because one of the frustrations we have is a couple of years ago, there was a huge net pension asset. So if you look at the government-wide financial statements, the counties or the government entities think, well, heck, all of a sudden our assets jump way up.
Sure.
And now all of a sudden it flip-flops. So it was a liability, then it was an asset. Now it's back to a liability, and it's a huge liability. And so
Yeah.
everybody looks at the financial statements and says, well, what's this
What
big
happened?
liability? And in reality, in the state of Utah, I call that a ghost liability because that liability is never going to come to fruition unless everyone in the Utah retirement system decided that they're going to retire tomorrow and they had to fully fund everybody's pensions.
So there were no changes in the pension program, increase in COLAs, any of that? Okay.
Nope.
So this was probably a result of the change in the market, that the pension assets or pension liabilities are swinging up and down, and that's what's changing the pension asset or liability.
Yep. And that all falls on the URS to have
Yes.
actuaries that are giving them correct information or correct estimates. It's a matter of how they're investing the money. And that's something that's totally out of control of the county. And so that's why I tell everybody, if you're going to look at the financial statements and you want to see a true picture of your liabilities, you need to ignore anything related to the pensions because that has no bearing on you as a county unless, like I said, at some point the URS says, hey, look, we have to fully fund this pension today. Then they're going to come to all the organizations and say, look, you owe this liability.
Was there a net pension asset last year?
I can't remember. Let me look. I know it was either last year or the year before.
Okay. You know what the group might find helpful, and I was looking through the MD&A, is a little more explanation as to the reasons for the changes in the activities rather than just the numbers, if that
So-
makes sense.
Yeah, that
Karen,
definitely makes sense to me.
if possible, yeah, it does make sense. But what I was thinking for the next meeting is if you could outline in an email the places where you want those explanations, then that way we can have Steve or Gabe or John, do those, provide that. I think if that would be
You
great.
bet.
Okay, cool.
I'd be happy to do that.
Yeah, going back to what you said a while ago, Karen, I do agree that some of these big picture things and understanding the ones that are changing, that's definitely where my curiosity lies in this. And so a couple of more that jumped out at me at the top of page 12 or PDF page 16, one of those pie graphs that says, the cost of all governmental activities went from 39 million, which was an increase of 11 million over the previous reporting period. I mean, that seems pretty large. And John, I understand that some of these questions it's better to have Gabe or someone else within the county answer, but do you happen to know why that number changed so much?
Yeah, I mean, I don't know the details. Like I said, I'd have to go back in and look at like individual expense accounts. But if you look at page 14, I mean, this is going to be broken down by function. But you can see kind of, the biggest change is going to be probably your public safety. So it went from 6.4 to 12, but if you look at the previous year, it's going to be around, I think it was like around 9 or 10. And what happened this year was in 2022. So the previous year it was lower because we capitalized the EMS building. So we pulled a lot of expenses out of there to capitalize the EMS building. Where this year you didn't have that. So that's where instead of reporting it as capital outlay, we needed additional expenditures to capitalize that building for how much that building costs. And so it came out of public safety because that was the function that it was closely related to. So that's why I say the government-wide statements are a little bit misleading if you're looking at raw numbers to say, hey, why did functions change? Because some of these, in particular that one, that's a $6 million change, and that is now up on the balance sheet as a building.
Okay, so it sounds like you're saying some of it has to do with capital projects and money moving from an operating expense to just being an asset, is that?
Yeah, yes, yep, a depreciable asset, yep. And then the rest of them are fairly close. I mean, all of the expenditures went up, you know, a little bit in like your general government went from 3.2, so it went up $1 million. You know, public health was relatively the same. Public works went up a couple million. Community, so each of the functions each increased a little bit, which if you look at them line item by line item, taking out of consideration the public safety because of the building, then each of them went up a little bit. And I'm looking at that saying, well, we're in 2023, we were in hyperinflation. So for me, reasonable costs would say, you know, these are going up. I don't know what the percentages are. But that could be a very logical explanation as to why costs increased in 2023 over 2022. Just the mere fact of we're in a hyperinflation during 2023. And I'm not saying that's all of it, but that is an explanation of why costs increased during last year.
Okay, thanks. Then a second question, it's page, page number 16, which is page 20 of the PDF. Is this the line that says, cash and cash equivalents, it's 26 million. I'm just trying to understand, and I'm embarrassed that I don't know the answer off the top of my head, but if we wanted to spend 26 million on a new public safety building, I don't think we could do it without borrowing money. So I'm assuming that a lot of that money is not things that are available for, it's not like our rainy day fund plus capital accounts.
Correct. Yeah. So how I explain cash is everybody wants to know, that's the big question, is how much money do we have available to spend? And what I would say is, so that cash number and all of those assets, and I would actually just take out of the discussion any capital assets. So we're talking about cash, receivables, all the way down to the contract receivable. So those assets right there are assets that you have that are fairly liquid assets, meaning they can be converted to cash in a short amount of time. However, if you look down in the liabilities, you've got 1.4 million that needs to be paid for accounts payable. You've got $5.7 million of the unearned revenue. So that's the LATCF money. So 6 million of that 25 million is cash sitting in the bank that you have for the LATCF money that hasn't been spent yet. And that really has no restrictions on it. You just can't use it for lobbying. So that is spendable money that you can spend, in future years after 2023. But then if you look down in the net position section at the bottom of page 16, you have 80 million in assets minus your debt. So that's what the net investment in capital assets, that's all of your capital assets minus any debt used to acquire those assets. You have 74,000 of non-spendable. That means that it's either already been spent or
Yeah, that's the inventory.
So it's non-spendable because you've already spent the money. It's just sitting as a physical asset in the county. And then 17 million of that 25 million is restricted on how you can use it. And then you have about 10 million that's assigned, and those are coming from everything that's not in the general fund has to be assigned for something. You cannot have unrestricted or unassigned in any fund except for the general fund. Everything like in the capital projects, special revenue funds, they're all assigned for certain purposes. And then, so unrestricted is basically 11.9 million. You have resources that you can use now for the upcoming year.
John, does the assigned in this case also include their encumbrances?
Yes.
Because I think that's worth pointing out to
Yep.
the group is that, you know, in governments, you can write a purchase order, right, for a purchase, and you may have not actually spent the cash yet. So it's not in accounts payable, but you've earmarked that money, so to speak, for a purchase that you want to make, and maybe you're still waiting on delivery of that product. That is what is a component of assigned. So in effect, it's money that has already been spent. We're just waiting for the product or service to come in, and then we will complete the transaction in the next fiscal year.
Yes.
So John did a great job of explaining that those net position components, and truly the unrestricted is more of a number that you can look at of, well, gee, what can we look at for next year in next year's budget that we would want to do? It's going to come from that unrestricted net position. And I'm glad that is, you know, that's the governmental activities as a whole, not just the general fund. But that you can look on page 22, which is at the fund level that John was talking about, 22 of the PDF, which is 18 of the statements, which shows unassigned fund balance in the general fund is 10.2 million. That's just the general fund. And John, correct me if I'm wrong, please, but if they have to make transfers to those, where are those transfers? To the EDC and those other funds for this TRT money, that could come to about $2 million, it looks like. And that would come out of that unassigned fund balance in the general fund. Do I have that correct?
Yes. Yep.
Does that make sense to the audit committee?
And what I would add to that is this statement right here, this one, page 22 and page 24 of the PDF. This is where you need to spend this should be your world. The government-wide financial statements, they have their purpose, but it's more for external parties to say, okay, what actual economic resources does the county have? Versus these statements right here are how your government operates. These are the resources that you have available to you currently that you're going to be able to utilize in the next 12 months. So these statements right here are going to mimic what is in Gabe's system.
Yeah, no, thanks. That's very helpful.
And, you know, I'd be happy to walk through those on a separate call if you'd like, and agree 100% with what Mr. Hatterley is saying about focusing on those governmental funds balance sheet and statement of revenues, expenditures, and changes in that position, changes in fund balance. That's important.
Okay, thanks. Anything else?
I don't have anything.
Okay, well, thanks, John. Fielding all the questions. Thanks, Karen, for helping us sort through this. So we will maybe can we ask Gabe to come in for the next agenda item? I can go. Yeah.
Oh, it's the Microsoft, the Surface. And it's been good. It didn't necessarily you have to, the one bummer was, this was a bummer. So with USU, I have to record lectures, right? They have
So, Quinn said Gabe is, working on ballot counting at this moment, so we're just gonna wait 3 minutes or so.
So bizarre. So I basically was told by this company, I mean, I went through this torture for probably a month. Like, sorry, you just have to get on a different laptop. So of course I went to USU.
Ron, do
Well,
you
just
know
not-
when the issue with the state auditor will be resolved? Is there any
That's probably
conclusion coming up?
that's probably a question for the commissioners. I don't know. I think almost everything was taken care of. Except for a couple of negotiating items that they're still working on with the state auditors. Is that correct, commissioners? That there's still some ongoing discussion?
Yeah, I hesitate to say anything concrete until it's fully agreed to, but it feels like it's very close right now.
Excellent. And then question on the compliance finding, I see that there were some accruals, it looks like, that didn't get made, that kind of affected the budget. Does the county know when the final budget amendment is made in the fiscal year? And could that be pushed a little bit later so that the finance department has more complete information and doesn't get a compliance finding again? It'd be great to head that off at the pass for next year, I guess is what I'm
Okay,
saying.
well, maybe let's revisit that, Gabe just arrived, so we'll
Perfect.
do the RFP agenda thing and then get back to what your suggestion. So Gabe, I think you asked to put this on the agenda, so could you explain what's going on? Or
Well, this is a pull from a template on the local government resource section of the state auditor's website. I took the initiative to highlight items that I'm not suggesting that's exhaustive to the amount of things on it that could, that might need to be adjusted. Some of them are obviously dates. And amounts in terms of periods of time. But other than that, it's a template standard from the state auditor's office. So it's a good place to start. The selection of this contractor should be made independently from me and my office.
okay, okay, and is that, I guess, an issue that's come up at previous I think at the previous meeting was, what interval do we want to be putting out this RFP? And I think Karen said that 3 years seemed a little on the short side.
I think Karen recommended 5 years. Is that correct, Karen?
Yes, ma'am. In my experience, 5 years is a good length of time. It takes a while for an auditor to really understand the workings of an entity, get their staff up to speed. And then once you get in a good groove, the more you understand, the more questions you can ask. And frequent changeovers sort of, in my opinion, keep the auditor more at a surface level. And it's that deeper understanding that's gained over a period of years that I believe is helpful.
Thanks. And I think that, just to give some background, I think the reason that it has, that we are at least considering the idea of doing it sooner is there was some errors in a previous audit. And I think that's what triggered this discussion. But I mean, my opinion is if, those errors have been fixed and they're not present in the current audit, then I'm not sure that it makes sense to change auditors so quickly. And it might make more sense just to go for 5 years, which will be the normal period. So I just want to, I think, in addition to looking at the details of the contract you put there, we also should ask ourselves, should we be doing this at all? And I know that you put it out there because there was, commissioners expressed interest in doing this, but, there's.
Yeah, I mean, I would be comfortable because I see, real benefits to the county. And continuing through to 5 years. I think that obviously there were some errors identified through that process. Perhaps. In some ways, a case could be.
And you might want to speak into the microphone.
In some ways, a case could be made that there's a even a higher level of strident preparation and involvement, and through some of these challenges, perhaps the relationship is even enhanced at this point, and its benefit to the county, not to my office and I'll work with any auditor that's selected and do what's needed to be done. But as far as the familiarity with the process and what's expected, I think that there's a lot of benefit there still to Grand County.
Something that was discussed at the very beginning of the meeting was circling up with the auditor and the audit committee prior to the start of the audit work to, cover areas that were important to the committee, and that kind of thing is an example of information that's gleaned over a period of time. And I don't know what year the current auditor is in year 2 or 3, but that is the kind of, to me, enhancement that you get with year to year, looking back at the prior year and saying, okay, well, how can we do this better? What can we improve on? How can the process be better? And it's that institutional knowledge to me that you build over time. And the suggestion that you meet ahead of time with the audit committee was just one. It's an example of that. If you do decide to go through with an RFP, though, I did have a couple of suggestions. In the objective and scope, it states that the audit must be completed and the report issued prior to June 30, 2024. I would suggest, well, first that should be 2025, but that date is moved up a month or two, perhaps the end of May, so that it gives the county time to evaluate the audit and then submit it to the GFOA. So instead of going right up to the deadline, might be helpful to establish a schedule that gets the audit completed sooner. I realize you had the delays with the component units, and that's a separate thing to address, but still the audit ideally should be completed well in advance of the filing deadline with the GFOA.
And what year are we in, John?
I think we just finished our third. I think this was the 3rd year. Was it the 2nd or 3rd year, Gabe? I think it might have been the 2nd.
Well, I think it's clear that at least myself is looking for that higher level of scrutiny than what we've had in the past, whether that's with Larson's or any other company. Following the proper process and having this done to a level that keeps us out of the current mess that we're in is what my goal would be.
Okay, so I think in our bylaws, we're supposed to make recommendations to the commission about, this, when to change auditors and contract and stuff like that. So, I mean, my personal recommendation would be not to undertake it this year. Do we want a formal vote? I mean, if we're just recommending that the contract continue to be extended for another year or two, I don't know if that. Do we want a discussion at the commission meeting, or do we just want to decline to forward that idea to them?
I would think it's important for the commission to discuss it.
Okay, so then, so I would entertain. Actually, I can just make the motion. I would move that we recommend to the commission to continue with Larson for another year, not put out an RFP, but but yeah, but it will be a discussion that we have. with the commission. So,
Yeah, I'll second that.
Can I maybe add a request, and this is gonna be whether or not we're the auditors or not, and this is to kind of add on to what Karen was saying. Absolutely, I would love, and any auditor is gonna love to get this audit done at the end of May. Just for the reasons that she expressed of having time to have it reviewed. But what that means is the books have to be closed and we have to do field work before May. It's unreasonable for us to start a county audit in May and have it done by the end of May. So there has to be some concerted effort on the county side. And I'm think Gabe is fully capable of doing it. It's just a matter of expectation and, you know, having field work done. And then obviously the component units have got to be done by that same timeline. And if their auditors are not going to be able to get to them until June, then maybe they need to find different auditors.
Gabe, do you feel like we can put sufficient pressure on our component units to step up? I'm just curious. I mean, I agree with both John and Karen, but what do we have to do to get there? That it's one thing to wish for it, but
To
Yeah.
what degree it would be out of bounds or appropriate for a commissioner to try to have a productive conversation with the CPA firm that we know is the cause of all of the delays? I mean, who knows?
or the
Right.
audit committee possibly. I mean, rather than one commissioner, I don't think that really would be the way to do
Right.
that. I would think that it would either be this committee or the chair and the vice chair, maybe an admin. I just think spreading it out a little bit, but I'm totally in favor of moving that forward and putting the pressure where it needs to be applied.
so this is an issue that's come up before, and maybe in our November meeting, we could have just a full agenda item to discuss in a more comprehensive way, you know,
Yeah.
things to do to make sure that things are happening early rather than late. Totally. So, and I think that what you were just talking about, which makes sense to me, would, you know, be a part of that. Right. Okay, and John, I think you're,
I haven't felt like I've had a lot of power to really
Right.
exert pressure there.
I mean, and I mean, the idea I floated, and this is gonna come up during budgeting, you know, these entities that are, well, I don't know whether we should blame them or their accounting firm for the delays, but you know, we're giving them money, and I think we can make just very, very clear this budgeting season that the money's not gonna happen next year if things aren't on time.
Right.
And that gives them a motivation to, you know, push their accounts to get it done sooner. And then, you know, another idea that I'm mentioning now, just so we don't forget it, you know, there was the idea of maybe, you know, trying to facilitate getting some other accounting firm to handle that.
For the component units.
Yeah.
Yeah.
Yeah, and what,
there
when you,
were-
I certainly know, I was a liaison to the transportation district, which was I think the very last one this year. It's a very small group, and they don't have the expertise to deal with, you know, they're just trying to keep their heads above water. So-
Right.
Was there some discussion, maybe with John to where it would be beneficial, or am I thinking backwards to have the same auditing or same firm doing the component units as doing ours? Is there some benefit there? I mean, I seem to recall that discussion at some point also.
I guess I don't know to what degree those other entities would have to break their contract or.
Okay.
Right, but I mean, I think that's, we've all, I think agreed that would be ideal if Larson would consider it. One other question I had maybe for the accountants in the room, is if like, especially for these small districts that don't have a lot on their books, like if we know a freelance CPA here in town, I mean, do they have the qualifications to just handle that if it's a small deal? I mean, like, could Dina Whitman do it or something, you know, like?
So let me give you some pros and cons to your discussion. Gabe, I'll give you what you just mentioned. So we have been doing the books for Canyonlands, and their audit is ready to go by February. we close all their books, and now we're not doing the books for them. They've contracted with an outside person in Moab to do their books, and so we'll probably be their auditors. I would imagine that their audit is going to be done in February. And I had this same conversation with them of, hey, look, your audit's late, and theirs is a direct result of their auditor. And we have a great relationship with that audit firm, and we refer a lot of work to that audit firm, but it's a little bit frustrating when their audit begins in February. And here's the issue that you're going to run into. So back to the pros and cons of, yes, it would be beneficial to have, say, Larson and Company do all the component units, because then I know where every one of those audits are, and I know what the problems are. I know whether it's my problem or I know whether it's the entity problem. The issue that you're going to run into is then if they change, they're going to have to go through an RFP process. They're not going to want to pay probably what a normal auditor is going to pay. I know that some of the entities, the firm that is doing some of the component units, are notoriously cheap. One of the issues that I have with that is if you pay a cheap fee, you're going to get cheap service. The other issue that you're going to run into with CPA firms or audit firms is there are firms in the state who kind of put both feet in the tax realm and the audit realm. So they will do tax season and they're consumed with tax season and they don't care about audits until after April 15th. And then they're tired because of tax season. So then they're not going to start their audits until May. There's probably 3 or 4 accounting firms or auditing firms in the state of Utah that do not do that. Like for us, we're full-time auditors. We do government audits the entire year. So I'm able to come and do audits in February where other audit firms are in tax season. And that is going to be the auditor's faults. So that's the other aspect that you're going to have to look at. So there's going to be the cost issue. As far as contracts go, nothing we agree to. So our proposal is not a contract. If you're not happy with us and we're in year 2 and we had a 3-year contract like we did, then there's nothing prohibiting the county from saying, you know what, we're a little bit frustrated. We're going to go out to RFP. Or there's nothing on my side that says, you know what, I'm a little bit frustrated and you're going to have to go find a new auditor. So it's not a binding contract, this RFP. I hate that it's called an RFP. It should be an RFQ, because nothing should be based on price as far as audits go. And I wish the state auditor would actually make this the audit as part of professional services, because then you can go out and find an auditor that you value and that you trust, and you're not bound by a bid process. And the auditors in the state have kind of shot themselves in the foot because they do tax season. Then they go out and do government audits and they don't care about how much money they make doing government audits. And so the government's, to have a comprehensive full audit, I know what goes into audits, and that's why we charge what we charge. But there's other audit firms that they're willing to realize, 50% on an audit just to keep their staff busy because they made a bunch of money during tax season. Whether or not you agree with that or disagree with that, that's just the way it is. And so I don't think you can get a comprehensive audit if your auditors are cutting corners. But those are the pros and cons. Yes, it would be beneficial to have the same audit firm. You'd have to get all your component units on board to bite off on that.
John, and just back to the other part of my question, and I'm not suggesting this for just any entity, but for an entity like the Transportation Special Service District, it's not very large or complicated. Is a lone wolf freelance CPA, are they even able to do an audit like that?
Well, they wouldn't be able to do the audit if they're helping them with their books.
Well,
But
if they're not helping them do the books, though, are they able to sign off on a set like an audit, or does that require some other level of certification or something?
no, I mean, if as long as they're a CPA and they're able to perform audits. I mean that most CPA firms are gonna have the ability to do audits. The issue that you would run into there is there's a lot of firms that only do 1 or 2 government audits, and that's going to subject them to a peer review, and they just don't think that that's worth the hassle. So a peer review is, I have another firm that comes and audits me. So we have a firm out of Florida that comes and audits us every 3 years, and we're required to do that. And then we have our own internal peer reviews that we're required to do every year. And so in order for them to do audits, that's going to be something that they're subject to. And most CPAs will be like, yeah, no, I don't want to do that.
Well, I think for us, I think starting with Kevin's suggestion to start applying the pressure through the finances is the first step, and maybe trying to get a grip on it moving forward.
And I wonder, I mean, I'll just say, I just went to, I think it was the rec, special service district, and they stated they've been with their auditor for, basically they said, Kathy said, for as long as she can remember, 20 years. And so going back to what Karen mentioned, it might just behoove them to start to consider that. And for that small district, I was shocked at what they pay for that audit. It was shocking. So I think that's the other thing on their end, is to look at another auditor.
High or shocking low?
I thought very high.
I had a
thought it
similar
was-
reaction to,
As a percentage of their budget.
Right.
Probably not.
Yeah. And then they were pretty miffed at, they came to do a presentation to the board, and that cost them an extra $1,000 just to have them come down for 30 minutes. So they were, yeah, so I think maybe just for us to approach them, and it takes time and energy, but it might behoove those entities to be looking at that.
So this is not my call, of course, but I see that in the independent auditors report, there is already a portion of the component units that are not audited. And that special service district, correct, John, is one of them.
Yep.
But it's insignificant anyway. So I guess my question would be, and not that I'm expecting an answer, but something for the group to think about is, when you look at those component units, do we even need an audit? Or is the county's auditor willing to take the balances as is from, I guess whatever group is doing their accounting, and fold them into the county's financial statements, even unaudited? I mean, the net position of the Thompson Special Service District is $875,000. So, it's just very small, and I think it's something to think about. Even the Special Service Water District is relatively small, 1.1 million in net position, and most
So-
of that is capital assets. So at any rate, food
Yeah,
for thought.
let me give you a clarification on that, Karen. So yes, it is true. So I would say the Grand County Special Water Service District, Thompson's, and the Transportation District, so they're required to just file a financial survey with the state. There is no reason why that can't be done in January or February. I don't know, they may have agreed upon procedures, but we can do the agreed upon procedures for them. I mean, that's a state requirement. It's not required to be audited. The other component units, so Canyonlands, the rec district, solid waste, and the EMS, those all, because of their budgets, require an audit. And if they were not audited, then potentially that's going to qualify that opinion unit if they're not audited.
Sure. So I don't know which of these component units are giving the county the most trouble as far as being delayed, but maybe the smaller ones, you just pass on it and don't worry about it anyway, and then focus on those 3 or 4 larger ones that you mentioned. And as far as putting the pressure there to get those audits done more quickly. or more timely, I should say.
Well, let's continue to discuss this at the next meeting, maybe in the interim, over email. I can get the ideas from John and Karen. And we'll have some more refined options to discuss at the next meeting.
So just to double back, we did have a motion made.
Oh, that's right. Yes, still on the floor. So.
Yep.
To recommend not putting out the RFP.
Right. Yep,
for
and
the,
put it on the commission's agenda for discussion.
Okay, any further discussion on that? Nope. All in favor? Okay, that passes 3-0. And that brings us to the end of our agenda. So thank you, everyone.
Thanks, John and Karen.
Thank you so much.
Thanks, commissioners. Thanks, audit committee.
Thank you. Thank you so much. Pleasure seeing everyone.
Thank you.
Thanks, Gabe.
You.